hopefully you'll see a screen of faces here. We've got a lot of people on talking about a real estate market update. So you obviously, hopefully know me at some point in time. Hello, Ian. My name is Justin Rice. I'm a financial planner here at Personal Wealth Strategies, along with my partner, David Balin. But we have some very special guests today, and I will introduce them. The first is co-founder of 194 Real Estate, serving mainly Bergen County, New Jersey. He led his company, building his team, properly serving clients with integrity to cause 300% growth from 2019 through 2022. And his experience also includes being court-appointed realtor in multiple divorce cases. Jay Levine, how are you doing today?
Hello, Justin Rice, and everybody here. Thank you for having me. I'm excited to be here. I love this stuff. I love this.
Next, we've got the SVP of Mortgage Lending, branch manager at Guaranteed Rate, a consistent top 1% leader in the entire nation for mortgage originations, licensed to do them in all 50 states, which is very rare, but his home state right here in New Jersey. And I'm sure that's his favorite state, but we can ask him later. Through his life, he has been profoundly inspired by his grandfather's hard work and success, and he's authored a book called Lessons from My Grandfather. To tell that story, it's my honor to introduce you to Marc Demetriou.
Thank you very much.
Awesome. And then we've got a certified real estate appraiser in New Jersey, New York, Pennsylvania, so the 3 states, providing detailed, impartial analysis of real estate values, over 30 years of experience, also a licensed real estate agent in New Jersey, and has served as an expert witness in federal bankruptcy court and the Hudson County Superior Court. We have Paul Sobol.
Thank you very much. It's good to be here with you all.
All right, awesome. So we will get the conversation started. Jay, since I started with you, you're in my top corner here. But Jay, give us some of the current trends that you're seeing in the market, in the local market here in North Jersey.
So it's an interesting market, as I'm sure we can all kind of agree on here. What we're seeing more recently, like right now, what I'm experiencing super low inventory, which I'm sure everybody kind of has that same idea here. And interest rates, as much as they were, they're still fluctuating and they're a little higher than maybe people would want. I feel that people have kind of settled in a little bit and are starting to accept the fact that the rates are what the rates are. They're starting to take advantage of some of the cool programs that other lenders have, which, some others might touch on here, that can help them, with that initial payment, with that rate for the first couple years. So I see the people really coming back into play, and we're getting multiple offers on all the listings that we have now. Where I can say the biggest difference is you still have some sellers out there that look to list a little bit higher than maybe what the market really calls for. And there you do see a little bit of a pause. Ultimately, it leads to, you do see the offers coming in, but you're not getting those multiple offers right off the bat. Otherwise, if you list at the right price, the inventory is so low that right now it is a great time to sell your home. There's just nothing out there.
So I hear great time to sell, maybe not a great time to buy with very low inventory. And it's kind of been crazy, the real estate market, because you would typically expect, and we'll go to the mortgage lender next, with the rising rates, that tends to slow down demand, which it definitely has. But their demand is still much higher than the supply is. And so, Marc, can you talk to us about rates, kind of where we've seen them skyrocket and maybe settle down a little bit, and what's kind of going on there from your perspective?
Yes, thank you. So, I've been doing this for 18 years, just for people listening and beyond. And so I've seen a lot of where we've been with rates, and then just steadily coming down over the years, 2-3% rates, last year. And right now, we're in a 5s or 6s, depending on the day and the week, So ultimately right now, just as Jay said, the clients right now are just in a position where they're just realizing rates aren't coming much lower right now. Values are not coming down that much lower right now. The people that were waiting, I told them in November, don't wait, because values are going to start going back up again, because there's hundreds of thousands of people on the sidelines like you. Rates aren't coming lower, and you're going to sit on the sidelines hoping rates go lower, hoping values go lower. Neither are going to happen. So the ones that listen were really happy about it. So now there's 50 to 100 people going to open houses between like $400,000 and $800,000 purchase prices. Those are blowing up. There's just no inventory. 800 to 1.5, slower, but still moving. So, and we just have a big problem. The biggest issue is people aren't selling because they have these 2-3% rates, and they don't want to get rid of that rate and chase an overpriced house possibly, overbidding price house possibly. So there's a lot of waiting. But to give you the positive side, and then I'll touch on the rates again for just 30 seconds. When we see rates in the fours, like steadily in the fours, they could be the fixed, they could be the arms. That's where stuff's going to blow up, because then there's a point where the 2 and 3 to 4 isn't that bad, it's manageable. And I really don't think we're going to see rates lower than fours again, like we had in the past, but maybe high threes if we get lucky on the arm. So I'd like to see the rates hover down to the low fives, high fives on the 30-year fix, maybe get into the low fours, high threes on the arms, which could take a year or two, and then we're kind of going to be done there if we get to that point. And that's where everybody that buys now will just refinance. And that's the point. Like, get the house and worry about refinancing afterwards. There's still a lot of programs, as Jay was mentioning, to maybe get the rate lower now, or to buy down programs and figure out a way to, just get the rate in a better position. Interest only loans for better payments. There's just a lot of ways to make it work. So it's always up to me as a wizard. Like, let me talk to the client. What payment can work for you? What can we back into and figure out the best way to buy now, knowing there's opportunities in the future to refinance. But the point is, rates have come off their highs. We're settling at a point now. Feds are just about done raising rates, hopefully. I think we'll start to see steadily ups and downs with the banking crisis and the debt ceiling crap. Like, we'll see rates steadily still ticking down. It may take a year to 2 to be where the bottom's at. Like, hey guys, it's time to refinance. That's my story. Drop the mic and I'm done.
Perfect, Mark. So what I'm hearing is not wait. And I'm also hearing that real estate prices are not going to come down. So they've obviously come up pretty dramatically over the last couple of years through COVID. So we'll go to the appraiser to kind of talk on this. So do you agree with Mark that that prices are not going to come back down?
I agree 1,000%. Interestingly, this morning I heard a report on the radio, CBS, the business report, that the housing market is heating up and mortgage applications are up. It's not, it was always hot. The problem is that, as Jay said and Mark said, there has been no inventory. And people will say, well, when's the best time to buy a house? Always and never. But it depends on your circumstance, right? But it depends on your circumstance. If you're a young family, are you going to be in it for a long time? Then you're in it for the long haul. If you're an employee of a company that you're going to get transferred every few years, then you're going to probably look at it a little bit differently. But equally importantly, people keep talking about they're going to wait for the crash, like they did in 07, 08. They're fooling themselves. It's not going to happen. It's a totally different market. And the number one thing is that in the last 10 years or so, not enough houses have been built. The demand far outseeds, I'm sure Jay will tell you, far outseeds the inventory. And the houses that are languishing are the people that didn't listen to their realtor and listed them too high. And I'll give you a quick example. There was a property that I did in Parsippany about a year ago. They had over 200 showings and they had 59 offers. They didn't even take the highest offer. Okay, so 58 people lost. Even with the higher rate, if half of those people got eliminated, there's still 30 other families that are out looking. So the demand is still there, and the rates are. I've been in an appraisal for 31 years. They were a little high. They're going to come back. I think the sweet spot mark is right. If we're around 5 in the 5s, I think things will be fine. The problem is there aren't enough sellers, period.
Yeah. Now, great. And if an attendee has any questions, feel free. We've got the chat function open. We have the Q&A feature open. So definitely feel free to chime in. Jay, I'll circle back to you now, knowing that if you're a seller, it's pretty easy in this market. But if you're a buyer, not so much. Do you have any tips for buyers how to navigate the market so they can get into a home that they would like?
Yeah, I mean, I think ultimately, just like really anything else that we're doing, whether it's a buyer, whether it's a seller, whether it's an investor, whether it's anyone else that we're dealing with, ultimate transparency, because what winds up killing deals in the long run is something that you didn't know about that comes up last minute or changes the deal around. So having a good relationship with someone like a Mark and someone like Paul that you can even, understand the market a little bit deeper and a little bit of a different angle. So I think it's important when you're working with a real estate agent to not only find one that you feel comfortable with in your area, but also one that shows that they have the relationships and the communication skills to really understand what's necessary to get through the process. As for, tips, tricks, and strategies, right now you have to lay your cards on the table as a buyer. You have to go in with what your strongest offer is. And one of the things that we do with buyers, because we get asked all the time, Paul, I'm sure you get asked this, like, what's the right price? And there is no right price, right? So I usually just talk to people like, all right, well, listen, there's no crystal ball, but if you had a crystal ball and tomorrow this property sold for 500K and you offered 495, would you be pissed off? And if you would be, then your best and final is not 495, it's 500. And then ask yourself that same question until you either get to a point where A, you can't afford it, B, you don't think it'll appraise for that, or C, it's just not the right move for you and emotionally you can move on. But I can't decide the price. So I think it really comes from the buyer, understanding where they're at, understanding their finances, understanding what strengths they have, and then utilizing those strengths moving forward and not holding back information from all parties because of this false interpretation that they have to protect certain things about themselves, not to give up all their cards, and having that full trust. I think that's a huge part of this.
Can I chime in? I think Jay's right. Like, every buyer wants to get a good deal or doesn't want to be the sucker. And every seller wants to walk away with a goal. It's really got to be, but I think it's okay to, I don't want to say overpay, but it's okay to extend yourself a little bit if it's really what the house you want. You're going to be there, like I said, for a while. It's okay. Markets have to go. The only way for markets to go up are for people to push them. So, and sometimes as an appraiser, the data doesn't always support it right away. You have to find someone who's local, who knows the market, who can interpret it correctly. But I think the problem is, like, people don't want to be, like Jay said, show their cards or be vulnerable, or you have to be smart and pragmatic, but you also have to be realistic as to what's right for you.
I want to chime in. That was great, Paul. I want to chime in one more thing too. I think this is important for everyone in general. So what we're doing to give our clients an advantage, because they're always like, hey, we just have a pre-approval, we're losing this opportunity, we lost that opportunity, got outbid. So what we're doing with our clients now, we're actually taking their information, we give them the pre-approval within hours or whatever is needed, and then we're actually running their information through underwriting at no cost to the clients. So we're actually giving them a legit mortgage approval. So when they're going to the table against 100 other offers, a couple cash in there, 95% of pre-approvals, we have legit mortgage approvals. So the seller knows they're approved for mortgage. And I will tell you that even my cash, we beat out 2 cash buyers last week, which is crazy. My mortgage approval, because the cash buyers wanted concession, wanted to go only an asking price, wanted to do their closing date, or we're not going to do cash. And they say, well, guess what? I got someone that's mortgage approved. They're willing to go a little over asking our closing date we want. We're going to take that deal over cash, which is pretty powerful. So that's a real big leg up when Jay was talking about benefits or ways for clients to win in this market. Like, no better than having a mortgage approval walk in with, like, hey, we're approved for mortgage, which is huge. Whether it means 5% down or FHA or VA, 100% financing, none of that matters. They have an approval, we're good. Just something to add in there.
Yeah, Justin, if I can real quick on that too, I think something that maybe is overlooked at times, and maybe even thought as hypey, but the relationship between myself as the realtor and the other realtor that is on the other side, there's no way for me to create a relationship with the seller if I'm representing the buyer, right? We know that it's unethical. We wouldn't do that anyway, but we do have the opportunity to create that relationship with the seller's agent to find out what they want. And some agents just, we list tons of homes, and agents just submit offers. They don't ask questions. They don't talk to me. They don't show interest. I mean, we have to be able to align. I want to be able to go back to my client as well as the listing agent and say, I had a nice conversation. And as much as this has nothing to do with the heart side of this, and let's look at the math, I have an idea of what these people are looking for. So really understanding what the buyer and seller are looking for so that you can be that connector is something I think that gets overlooked in our business. And we're just taking sides. I'm on this side of the table, you're on that side of the table. Well, why can't we just come to the table and figure out what works for all of us?
I think a good point, Jay, too, is right now the market's so hot, people are like, I can sell my house myself. Yeah, you really can't. Okay, you really can't.
Yeah, agreed there. That's a whole nother segment, Justin.
Right.
David, you have to let us know when that webinar is. You can say that's coming soon.
Okay.
Well, one of the things that I've noticed with clients and prospective clients is that they typically set a price range of what they want to buy a house for, and then they go looking in that range. And when the market gets competitive, they got nowhere to go because they're already at the top of their range. Do you recommend that people knock it down a peg so that they have room on the top to be able to move up when the offer bidding starts?
if that's directed towards me. So I'm actually going through that right now with a client who has been softly pre-approved multiple times, multiple banks, shopping around all the things, finally settled on a mortgage broker and got the solid pre-approval. And now we're at 600, and we were looking at 600 and maybe even a little higher than that at some points. Again, against my better judgment, didn't want to go out there and look with but again, it's a friend, it's someone that I trust. But now we're at 600. So the reality of it is, I said, listen, we should be looking at 550 to 575 so that we have some playroom, because if it's a new property and it's hot, then we're going to need to go and be aggressive. But at the same time, I'm also setting our list up to even 6.25, because there are the ones that Paul mentioned before, that when they don't listen to the real estate agent, or the real estate agent doesn't know the market as well, and it's listed too high and they're not budging off that price, there are opportunities still to get deals in this market. It's you just have to go searching for it. And I think I'm losing less deals. I think agents are losing less deals competing. They're losing more deals because they weren't in communication with their client quick enough, and then the house is gone before they can even go look.
So in that type of situation where you're maybe even bidding above asking price, an appraisal comes in, how are you doing appraisals, Paul, now where the home may not appraise for some of the values that how often are you seeing that?
Well, here's what you really want to do. First of all, you want to have an appraiser that has what's called geographic competency, someone that knows the market. So you're going to look at what has sold. You want to keep your sales fairly recent, because if you have a house that closed 3 months ago, it likely went under contract 6 months ago. So what's equally as important right now are properties that are under contract. And Jay, I don't know, do you get phone calls from appraisers asking you? Okay. Yes. And many times, hopefully, you'll share that with them.
Always.
A lot of people will share me the exact amount, which I appreciate. So that way, those pending sales are even more valuable than the closed sales, because it shows us where we are today. And then third, as important, are what's active. So for example, and I say this, I have 6 appraisers that work for me, many of which I trained, and I enjoy that. I like taking people with no experience and then molding them in my image. So, but what you want to look at is, okay, so if nothing is listed for below, let's say 600,000, and you're at 590, well, there you go. Like already, if you come into the market today, you're not going to find the house you're already under contract for. Meanwhile, if the closed sales are saying 575 or 580, use a pending sale or two that Jay's going to help me with, and put that in the report, and truly interpret the market. I'm not like many appraisers. I got myself into trouble. I'm a capitalist. I think things are worth what the market says they're worth. And I think you really have to, the word that is used a lot is we have to analyze. And a lot of appraisers don't. They're form fillers. We analyze. You want to look at the market, and those pending sales are right now are gold.
No, that's great. Yeah, if you're just kind of getting an appraiser that's looking, just filling out forms and looking at that outdated data, because by the time it closes, it's
well,
so
if I may too,
away.
And now Fannie Mae is moving to a program where they're using data collectors, people that take a 1 or 2 hour online course and go and measure a house and take pictures of it and send that information to an appraiser somewhere else in the country, and they're writing the appraisal because it's cheaper. And Mark's company doesn't use them. I wouldn't work with it. You want someone that's using companies that have boots on the ground that really know what they're evaluating for sure.
No, great. Thanks so much, Paul. I want to go actually to Mark, because earlier this year, there was some mortgage related news that was coming out in terms of some of the changes to loan programs. There was a lot of misinformation saying, oh, you want to now kill your credit because now they're giving, extra points to bad credit and taking away from good credit. Can you just clear and dispel some of those myths there of what changes actually occurred, and what you're seeing and why you need to maintain good credit still?
Yeah, there's been a lot of iterations of that. Some of that really hasn't come to fruition yet. They put some of that off, but just to not bore a lot of people with all the detail, but Fannie and Freddie Mac are the two buyers of mortgages. They buy 95% of all mortgages in the country. All banks, mortgage lenders, brokers, individual banks, doesn't really matter. They sell most of their paper to Fannie Freddie. And Fannie Freddie had these like overlays or pricing adjustments just to kind of dictate with the market how they want things to move. Like they raised rates on second home investment property. So they're going to buy loans or second home investment property. They raised the rates on those because they were really concerned with how heated the market was, wanted to slow it down a little bit. So by raising the rates, it slows things down a little bit, right? So they have, as much as the Fed has ability to raise rates, the Fannie Mae and Freddie Mac buyers have ability to control the market to some degree as well. So they started putting in these layers of, and they have a lot of different layers, but this one in particular is about based on credit score, which is crazy to say. If you have lower credit, almost in a way, the idea was like, I understand, like, let's help the people have lower credit scores so they can afford to buy homes, or so it's more affordable to them. Like that's kind of the mindset. So like, okay, so let's make the hits higher for higher credit score people, a little lower for lower score people. Like the idea sounded nice, right? Like let's help those people. But in a sense, everyone's like, well, hold on a second, I have better credit scores. Why am I getting more hits than the guys or gals that have worse credit scores? So the idea might have been in a bubble, kind of like, hey, it sounds like a nice idea, not a good idea. So obviously, I love the fact that the whole country rallying around, like, what the heck's going on here? You know, Democrat, Republican didn't matter. It was like, what's going on here? So they obviously took a look at that, like, yeah, we need to put a hold on some of this stuff. So that's kind of what was going on. But they have a lot of layers on there still right now. And this is the part I talked about, well, not on this call, but a lot of the panels I'm on and other calls I'm on, where there's a lot of froth in the rates, in a sense, because there's so much layering from Fannie and Freddie, so much layering that a way that these rates can come down. Because listen, the feds know that consumer spending and really housing in general is the biggest driver of the economy. House purchase is the biggest driver because all the things that go into buying a home, title insurance, lawyers' fees, it gets the realtors to make some money, mortgage people make some money, everyone above, from the driveway to the landscapers to the Home Depot, the Lowe's, you name it, it drives the economy big time. And they know that. So one of the ways that behind the scenes they've talked about is how can we get rates lower without having it be caused by political, geopolitical, or just, monetary policy. And one of the big ways is the froth in the Fannie Freddie rates. The froth that's in there, they can actually pare that down a little bit. They're very profitable now. They're making a ton of money. They're still in receivership. They're not, that's a whole other story. That the government really taking all the profits from both of them since the crisis in 2008. That's a whole other story. And the shareholders are still having lawsuits against them for that. But I can't understand that one, that they're still in receivership. But there's enough profit going on now where I think there's ample opportunity for them to start lowering these rates a little bit, lowering the way that we sell to the Fannie Freddie, so we can bring in better rates that we put on the street. So that's an instant way to start seeing rates get better without the economic factors moving rates. So very detailed, but this is real stuff. And they know now they have to do something to low rates. The feds can't buy paper anymore. They have their balance sheets are bloated. They have trillions of dollars in mortgage-backed securities and treasuries that they bought to drive rates down to 2% artificially. They bought their own paper and drove rates down. It's the craziest thing ever. That's what they did. But now it's got to be, how can they do this organically in a way? And this is the way. And I've been talking about this for a while. No one's really talking about this yet, but this is really the way to do it.
And rates were too low for too long.
But they were artificially low, way too long, way too low. And 80% of the country refinanced, 80%.
Yours truly included.
Yeah, 80%. So this is why we're in this really wild post-COVID scenario. No inventory, rates are higher. To go from 2.5% to 7% that first month was like insanity. The snap is real. For every $400,000 loan, it's about $1,000 a month if the rates are in the high sixes. That's real. That's real. $1,000 more payment. That's legit. So it's come back a little bit off of that, but that's real expenses. So there's good news with the knowing that there is a rubber band kind of ready to snap it away where, if the bond market knows the Feds are done raising rates, inflation's in check, like they'll start to buy up these high rate backed securities because no rates are going to go lower. So we're on that edge. Now, every time I see some news in a good way where, hey, inflation's in check, the rates kind of snap down a quarter because I know it's so wild like a rubber band. So
there was more good news this morning. Did that affect rates today?
They're steady. They kind of the CPI number. They knew they were steady. Didn't do too much. Didn't make them get worse, but it did steady. But they're watching economic news every day now. They really are. So we're in a really good place. I think the worst is behind us. I know they keep talking about the recession. I don't think we're gonna have a recession. I really don't.
I don't
I
think
think
so.
we're gonna be okay. We'll kind of ease our way out of this.
Yeah.
There's still other issues at hand, but one of them being just the stability of the banking sector, which I think we're gonna get there sooner than later. But
Good.
again, long-winded, but that's kind of a lot of information in my 8-minute talk.
No, awesome. Thanks so much for all that knowledge, Mark, and foresight as well. We have been focusing a lot on buyers and kind of taking the sellers for granted because of the low inventory, but there has to be some things that you can still do as a seller to make sure that your home is prepared for sale for the the maximum possible price. Jay, do you have any ideas surrounding that for sellers of what they can do to just make sure their home looks and stands out even in this hot market?
Yeah, I mean, listen, it's over the last few years, if you were a seller, we recommended that you didn't do anything to your home because whatever you were going to spend on doing it, you weren't going to get in return. And most likely you were going to get probably the offer you wanted anyway without having to do those things. So I can see us working ourselves back into a market like that with the low inventory and people, so many, like I said, 200 people at an open house, 50, like all those things are starting to come back into play. But from my opinion, I think it is always in the best interest of the seller to go through and look for the things that are going to come up during those minor inspection issues that are cosmetically related, because right now you're going to get offers that have no cosmetic issues. It's just the big stuff. So just go through and look for the things that might come up during inspections. If you have concerns, I've had people do inspections prior to listing their house so that we can understand what's going to come up on that report. Again, that doesn't always happen. That is if we have some unsure questions about maybe some things, we can hire a professional to look beforehand. But I think making sure that the property is clean as it can be. Buyers aren't very creative that I've seen in what they see, and they look at it face value. And if there's things out on the floor, if there is clutter all over the place, it can change people's opinions of a place. So I think just really making sure that it is nice, inviting, as clean as possible. And then if there's any major defects, either having a plan in place to remedy those with a dollar amount when they're brought up, and or fixing them beforehand if it's something that you can get taken care of. So as for strategies though, right now it's listed for a price that's not gouging the market. Do your research. Like Paul said, I don't just look at homes that have sold. I'm looking at what's on the market now. Do I have a house on the market that's already under contract that's was listed for 3 days? Then that's a good comp, because I understand that likely went over that asking price. Even if I don't speak to that listing agent, I have an idea it was either at or above with that timing. So I kind of really do the math there. But then it comes down to who you pick again, and who they're going to speak to, and who they're going to talk to, and how they're getting their message across. And are they posting and praying, or are they getting in rooms with rock stars like Mark, Paul, Dave, and Justin, talking about what they do? Thank you. Talking about what they do, making new relationships, and driving forward all the things that they have to offer. So I think it really comes down to who you're working with.
I want to weigh on that too, as far as sellers. We get that question all the time: what adds value and so forth. First of all, someone is planning on selling their house. I think Jay's right. Don't do anything. People have this, they're drunk from watching HGTV and what people are doing. You could spend a ton of money and put in a beautiful kitchen. It may not be what buyers want. Buyers want to put their own, they envision themselves living there. They don't envision you living there. So, and they don't envision themselves living in your house. They envision themselves living in their own house. So clean it up, declutter it, things like that. And then also people will ask too about, adding value. Well, we have a new roof, and well, congratulations, you've maintained your house. Does it add value? Maybe fractionally, because if you have two identical houses that are, and one has a new roof and one doesn't, the house with the new roof will sell first. Will it sell for more? Maybe not. And early on, when these flip shows came on, like 20 years ago, one in particular would do things, and they would say new siding cost X, added value X. And after the first season, they stopped doing it. And I think because people probably, got to them and said, you're lying, you're misrepresenting it. I don't say lying. You're misrepresenting it. So you really want to be very pragmatic in what you're doing before you put your house on the sale. I think Jay's right. Sometimes having a home inspection, particularly one, the house that, houses come on the market that say, original owner. Well, that's not a good thing, because they've been living there for 40 years and no one's inspected it in 40 years. So you really want to look at a lot of different facets.
Now, I want to
Yeah, that
plug,
might be
I
good.
want to plug, I want to plug one thing for you, Paul, in a way where, again, great idea about the inspection. I've seen clients do that too. They kind of want to know what problems they're going to have going into the listing. I think it's great, selling their house, but also clients, because I do a lot of work with divorcee clients, estate buyouts, and also just clients in general. I've seen them also ask to get an appraisal done before they even list it, which I'm sure Jay, you've seen too, and Paul does those all the time, whether it's for a tax appeal, Paul does those, whether it's for estate buyouts, Paul does those with divorce clients, what's the house worth to buy each other out, and also people looking to sell. It does cost, a couple of dollars to do it, not where it's, gonna break the bank, but it may be worthy of just saying, maybe I'll do an appraisal. But Jay also does what's called the comparative market analysis. We're just kind of doing an analysis for a client as well, almost kind of like an appraisal, but it's something Jay does as a service with no cost, of course, but they put together this market analysis, say, here's what's listed, here's pending sales, here's what just came off the market or whatever it was or expired. Like, that's what Jay will do as an expert. But the worst case, if you want to spend the money, then Paul can do the appraisal.
When sellers call me though and want me to do that, Mark, for if they're selling, I do tend to steer them towards a realtor or someone they know or so forth. Because for selling, first of all, there's only one true way to know what a house is worth: to sell it.
Yeah,
So-
right.
Right. But so let's say, and we have like a 5% variation is more than acceptable in our business. So if you have a $600,000 house, if I come in at 570 or and they sell it for 600, I was wrong. If I come in at 630 and they only get 600, I was wrong. So not these, because these are real dollars, I get it. So statistically, I'm gold. So I think it's more appropriate for a realtor like Jay to do the CMA. They I don't know, you don't charge for them, right, Jay? They're
No,
right.
no, not.
So where they don't want to spend $500 to have me kill a fly with a sledgehammer, they'll get what they need, from Jay, and it's not as narrow, and then they'll put it on the market. They'll find what they'll.
And we have the ability to also, when we're speaking to the clients about this, is let them know that, if this is not an appraised value at the end of the day, this is not what I think it could possibly sell for. This is what I think you should list it for, because
and then let the market
do its work,
Right.
which gives me a bit of wiggle room there as well. So I want to give a range of what I think the house could be worth, and then I want to tell you that just like eBay figured out, you don't list things for what they're worth. You list things for $1, and you let people's emotions and the market take over, and you get to where you're supposed to be. I know that's hard for some sellers to swallow, to be under the price that they ultimately want to get to, but being over that price and then constantly backpedaling is worse than having the
1,000%
the leverage of having a few offers to choose from.
I read a great article that said you want to create, because I'm a real estate license too. I don't really sell it. I do it for access this work, but you want to create a bidding war between multiple buyers, not a bidding war between the buyer and the seller.
Right.
That's more like that's not.
Right. And to your point, and to Paul's point, yeah, the CMA is, like I said it 4 times, a really great way to work with the realtor on that.
100%.
On it, but to go back to Paul for the plug of the value. Divorcing clients will use someone like Paul a lot, because they don't know how much is the house worth to buy each other out, or should we sell it or not. Huge in his area. Tax appeals huge in his area, and also estate planning buyouts are also huge. If someone dies and leaves the house 2 people, again, they need to know what that's valued at. It could be for estate planning purposes, or just to buy each other out. So just to know where people don't understand sometimes where a real appraiser can come in value. It's not just doing a mortgage. But anyway,
on the Paul plug too, one thing on the buy side that we have done for people is in our offer, we have waived the appraisal, not waiving the appraisal, but we've rushed the appraisal to say that we're going to do the appraisal during attorney review so that we can waive the appraisal upon going under contract. So, again, that's not necessarily waiving the appraisal, but if we pay a rush for it, I've had clients, rush the appraisal through, it's done in a few days.
Yeah.
Now you can go in with a clean offer. And again, depending on the listing, if there's a lot of action on it, it might not be as possible, but if there's some wiggle room there and the house has been on the market, you can do things to be creative like that.
You really want to have an informed buyer too, Jay. You're right. Like, they may know they're paying more than what right now, what the data is showing. But like I said, sometimes the markets move, like in 2020, 2021, market was moving so quickly, it was very hard to keep up. So as long as they know where they are and they're comfortable with it, look, this is their life. This is, if they have a wife, they have children, the whole thing. You want to have some stability and find a house that you're comfortable with, that you're going to live in.
Mhm.
And if you have to overpay for it, it's not even over. Like I said, people are so afraid of, they don't want to be the chump, that, but you know what, if you're in a house you like, in a neighborhood you like, I think you've won.
Right. But then they'll pay sticker for a car because like,
Right.
well, it's the best car ever. I gotta pay sticker for it. Like, no problem.
They only had one. Well, yeah,
Right.
sometimes in a neighborhood, this is the only house.
So I have found that everybody in the world, I was in the car business, everybody admits to paying a lot for their car and less for their home. That's what it is the opposite. Like, I paid a lot for my car. I paid nothing for my house. It's the two opposites.
Yeah. Justin, now we monopolize all the time here. I know as a radio show host, which I was for many years, I understand you're trying. Let's get back to you so you can moderate this thing if you want.
No, it's amazing. I love just watching the experts take it away. You made my job really easy today.
Yeah.
And one big takeaway for our attendees and then those watching on the replay is to consult the experts. I mean, clearly you're going to be better off having an expert in your corner than trying to navigate this alone. So whether it's one of these fine gentlemen here or somebody that and trust, definitely consult that expert to work through this process because it seems so simple, but there's a lot of intricacies that you can appreciate that go on behind the scenes that they will know about to help guide you through. So I'm going to go around the circle one more time, you can give some final statements, and then definitely share your contact information where if people want to reach out, they can find you guys. Jay, start with you.
So yeah, well, I think we've shared a lot today. So I will take this last few minutes just to thank everybody. Justin, we're involved together in a few different aspects of business and some coaching groups, and you are a incredible leader, incredible host here, and you articulate so well and you understand people. And I just appreciate the opportunity to be here and help serve your friends, family, clients, and all the people here. So my name is Jay Levine, owner, co-founder, 194 Real Estate Group. You can see all the signs behind me, and I will drop my information in the chat here. But I'd say the best way to find me, I'm an old guy, is to go on Facebook and search for Jay Levine, the realtor. I'm out of Bergen County, New Milford, New Jersey, 194 Real Estate Group. And if you could also call me 201-906-0519. So appreciate it, guys.
Thanks, Jay. Mark, I see you sharing your contact information in the chat.
That's how I roll. That's how I roll. My mom didn't raise a dummy.
Awesome. So it is there. And on if you're watching the YouTube and you're not seeing the chat, it will be down in the description below. I'll make sure all his contact information is there. Mark, any final words?
Yeah, I just think ultimately, we've all touched on it. In this financial transaction, which is one of the largest of your life when you're buying a home or selling a home for that matter, or even refinancing, still a very large financial transaction. Having experts in your corner, more people here, is essential. The guidance. I don't sell people. I consult through knowledge and education. I'm not selling. I'm discussing. I'm talking. It's education. It's knowledge. It's what's going on. So I'm not a salesperson. And people that are in my business, just like Jay, just like Paul and yourself, we're supplying knowledge and expertise and guidance, and we treat people like your brothers or sisters. Like that's how we live our life with ethics, right? So you want to have people in your corner that really can help guide you in the right direction, because all of us here can help save you money or help you in a better position by doing the right thing, right? So that's really the essence of it. We killed the whole topic of what's happening with the values and rates and inventory, but so yeah, good stuff. It's been great to be on today, and I'm licensed in all 50 states, whoever's listening too, by the way, which is pretty awesome. So wherever you are, I can help guide you, or just any questions you have, I'm here to answer as well.
All right, awesome. Before we get to David, which will share some future webinars that we'll be doing, Paul, your final.
Well, thanks. First of all, thank you for inviting me today. It's been a really good. I've known Mark for a long time, but Jay, it's been a lively discussion. Certainly, three guys that have plenty to say. But Justin, you can share I'm old school. You can share my contact information with everyone. But if you want to Google me, it's Paul Sobol, Sobol, or Google the Passionate Appraiser, because that was an article that was written about me about 15 years ago. And it's true. I've been an appraiser for 31 years. I love what I do. I'm happy to talk about real estate in any, because it's one of the most important purchase. Mark is right, and Jay, the biggest purchase likely you'll ever make in your life. And but it's an emotional one too. It's not just about the dollars and cents. So you really want to make sure you have all the information you can going in, whether it be if you're going to buy a property, if you've inherited a property, if unfortunately maybe you're in a situation where you're getting divorced. You really want to have as much information as possible, and I'm happy to share any of it.
Awesome. Thank you so much, Paul. David, over to you. What's going on next?
Wow, it's hard to beat that. That was that was a real wow. And I'll just share with the panel that my wife and I bought a second house, a few months ago, and really could have used you guys at that point because we kind of stumbled on all that advice, but would have been helpful to have someone telling us. But I will say this: we had a great realtor, we had a great mortgage person helping us out, and the appraiser got gold stars because he moved very quickly. And the whole deal, I was amazed when we made the offer. The seller, their main thing was that they wanted to close very quickly, and I was thinking it was going to take forever, and they wanted to close in a month. And we got it done because we had a good team with us. So thank you for all your advice and assistance. Our next webinar is going to be on June 7th, Wednesday at noon, our regular time, and it's going to be on the topic of to Roth or not to Roth. We get this question a lot, and it's persistent. We get it year after year after year, whether you're young or you're old. It's the question of, do I put my money in on a pre-tax basis to a retirement account, get my tax deduction now, or do I use that Roth 401k, Roth IRA idea, put the money in after tax so that I get tax-free distributions at retirement? It's a very interesting topic. We had tax law changes at the end of December that made it even, we'll use the word interesting, more interesting than it was. You can say complicated, more interesting, however you want to phrase it. But we're gonna really deal with this topic in depth. Recommend whether you're just starting out in retirement savings or you're actually already retired, talk about some of the tax strategies you can make use of. And then again, that's June 7th at noon. So we hope to see you all again. Justin, you're muted now.
Thank you, David. Thank you again for our panelists, and thank you to the attendees that stuck around and those watching on the replay. We look forward to working with you soon. Thanks.
Great.
Thanks,
Thanks, guys,
everyone.
for having us.
All right, guys, thanks.